Hey, thanks for being in the REC experience. I'm your host, Jas Takhar, with your girl, Laura L. Toast Stewart. What's going on, Toast?
Hey, Jazzy, how's it going?
I'm good.
Good.
We had a legend, a living legend on this week's podcast.
I got to tell you, when we booked this gentleman to be on our podcast, there was a lot of excitement in the room. So shout out to Luke on our team for getting the job done.
Mr. Robert Kiyosaki, Mr. Rich Dad, Poor Dad himself. Before we get into the episode, before we talk about, we essentially do a little recap of what was in that episode. Before we get there, though, I need you guys to do a favor. If you're watching on YouTube right now, make sure to click that subscribe button, smash. That's what the kids say. They say smash the bell, the notification. Smash it. If you're listening while you're driving, make sure that you're subscribed on some type of podcast platform. And if you're new to the REC experience, this is a podcast on all things real estate, entrepreneurship, and leadership. Essentially, you get to be a fly on the wall of conversations that we're already having with industry leaders, again, in real estate and entrepreneurship. We're documenting what we're doing. Laura, what role do you play here at REC Canada, kind of / REC experience?
Well, I think you like to call me the crazy eight? The crazy eight, because I do a lot of everything. That's
is 8 your favorite number? Would 8 be a big number?
No, but sure.
What is your favorite number?
63.
That's an odd number. Okay, go on. It literally is an odd number. Go on.
You're good at that. Odds and evens. So you did learn something in school. So maybe school wasn't so bad. Robert, it wasn't so bad after all. So essentially, how it started was I was helping to get guests. I was helping to produce the whole thing. Was more on the back end of things, but now I'm joining in to kind of co-host with you every couple podcasts that we do, which has been a lot of fun. But because of that, we had to bring in somebody else to help us. So like I mentioned before, Luke, he's been helping us get new guests. And this one was actually so interesting to watch from afar. I must admit, Jas was like throwing a little off game
a little bit today.
You don't see that Robert, very much here.
Yeah, you don't. And so Robert brought a lot of knowledge. He likes to speak about high-level macroeconomics. And so we spoke about the importance of having the right mindset. It's something that if you're, again, new to us, scroll down to the other 115 episodes, 116 episodes. We do talk a lot about mindset because, look, you can know the tactics, but if your why is not strong enough, then chances are it's not going to last long, right?
Yeah, we talk about that here. You were asking what I really do here at REC, and that's really I help hold people's hands through the 10-day due diligence period if they're buying pre-construction. Obviously, then I dabble in marketing and media for our team as well. But yeah, it can get very, very tiresome. If you want to be successful, you got to work really hard. And if your why, like you mentioned, isn't strong enough, if you don't have passion that's really pulling you, it can get daunting. It can get daunting for sure.
Awesome. Make sure you guys leave us a comment. Let us know. Press the like button because it does help the algorithm with YouTube. And if you have not yet signed up for the first ever, we should be able to get a Book of World Records.
I'm sure if we asked, we could be.
We probably could if we had.
We'll get Luke on it.
It's the first ever 12-hour real estate marathon. It's a webinar. It's going to go on for 12 hours. It's happening Saturday, August 15th. Go to therealeestatemarathon.com, 9 a.m. to 9 p.m. Eastern. We got, I think, about 17, 18 speakers lined up?
Yeah, I think overall, if you really count everyone, we're looking closer to 20. It's going to be an insane day. Yeah. I'm so excited for it, but I'm sure when it's over, I'm just going to hit the pillow. But
good thing the next day is a Sunday. We're going to get it all off as we always do. Guys, if you're not new to us, just thank you. Thank you so much for all the ongoing support. As always, as I mentioned, leave us a comment and press that like button.
Enjoy the show.
REC Experience presents Real Estate, Entrepreneurship, Leadership with your host, Jas Takhar. The REC Experience podcast is now on air.
Such a pleasure and an honor to have the man, the myth, the legend himself, Mr. Robert Kiyosaki, on the podcast today. How are you doing today, Robert?
Well, I'm doing outstanding. It's nice to be talking to Toronto. I've had many fond memories up there.
Have you been here? Have you been here a couple of times, Robert?
I used to go there about every 2 months. And I've taken 3 companies public on the Toronto Stock Exchange. And I used to hang out in Mississauga a lot. And I used to
Mississauga. So I'm actually in the East office today in Toronto. We have a satellite office in Mississauga as well. So that's very interesting. Small world. Obviously, there's a lot that I kind of want to go over with you today. Just your thoughts on what people are going through in terms of the pandemic and how we could possibly give some tips and strategies for entrepreneurs. But before we even get to that, you wrote a little book that sold a couple of copies that some people might know of. And I hope everyone can hear and feel my sarcasm when I say that it is probably the book, the Bible, so to speak, when it comes to investing in entrepreneurship, or for me, really opening up the mindset, because it talks a lot about it. I'm obviously speaking about the Rich Dad, Poor Dad book. Now, Robert, what first and foremost made you write that specific book?
Well, this may sound like it's bragging, but I could see this crisis coming. So 25 years ago, and one of the books that came out later around 2000 was this book here, Rich Dad's Prophecy. And it was predicting the biggest stock market crash would come in 2016. And it didn't happen because in 2008, instead of allowing the markets to crash, I didn't know there was such a thing as quantitative easing and zero interest rate policies. So the market should have crashed in 2016, but then Corona came along and it hammered it in March of 2020. But I'm not, it's really about our monetary system, and that's why I wrote this book here. It's called Fake Money, Fake Teachers, Fake Assets. So it's not real estate or anything like that. It's our fake money. And I apologize. I know the Canadian dollar, the loonie, is struggling because it's the loonie. And it makes life harder when the value of the loonie goes down. But it also makes gold more expensive. So that's how, I'm a gold bug. And in this book here, Fake, and I've taken, like I said, 3 companies public on the Toronto Stock Exchange. One was a gold company. So I'm really a student of macroeconomics, and real estate is part of that package. So if somebody says I'm a real estate guy, I go, well, I'm more than that. And that's what I've been attempting to teach people. So I feel for the people of the world today, because this crisis, it's been coming for years. They just keep pumping it up. And that's the US Federal Reserve Bank. They just keep printing more money. So today, gold went up, I think another $34, and silver went up another $2 or whatever it is. And that's because the confidence in the US dollar is going out. So that's really what's going on. So I'm macro more than a real estate guy.
Now, Robert, when you say macroeconomics, so somebody who's watching or listening right now, what is it that you're looking for? Is it the fact that every 10, 11 years, there's going to be a downturn, a possible downturn, and that's when an investor or yourself like to kind of get in when everyone's a little bit fearful? You kind of get in and get in at that time where there is a downturn. When you speak about macroeconomics, what is it that you're looking for?
Well, I covered in Fake. And I was in Vietnam in 1972. And I got to Vietnam in January of 72. And my rich dad sent me a letter saying, hey, watch out. The world's going to change. Nixon took the dollar off the gold standard. And that's when I didn't know, I was 20-something years old. And I read about it in Fake. So I said, well, what does that mean that the dollar's off the gold standard? So I was a Marine pilot, and we flew, my co-pilot and I, and one guy, we flew off the carrier and we went looking for gold. So I cover it in fake here. So we, being Marines, we're not the smartest guys on earth. We're not known for our IQ. So the problem was the gold mine in Vietnam was behind enemy lines. So we figured we could still cut it. It was I always see everything as opportunity, no matter how bad it gets. I said, well, the opportunity is if the gold mine is behind enemy lines, the price of gold must be low. So we flew behind enemy lines, and that's the whole story there. And we get there, and this little Vietnamese woman is there, and we're trying to buy gold from her, asking for a discount. And here we are, college graduates, and she's like this tall and bright red teeth because she's eating beetle nuts. And she laughed at us. She says, discount. She says, spot. And it's vocabulary. I said, what does spot mean? Well, spot means the price of gold is the same all over the world. And that's when I woke up and went, oh my God. This woman has never gone to college. She didn't go to Harvard. But she knows more about money than I do. And that was kind of and that's what my rich dad was trying to tell me. You got to watch the money. And not so much the money, but who's printing it. So what happened in 71 is the US dollar went from gold back to fake. And that kind of set my whole world to just see the world from fake money, so they could print as much as they like. So that'd be like you and me just writing a check or having a printing press, or a Xerox machine printing out dollars. And that's what macro means to me. So the reason I'm aware of the loonie is because there was a time when the loonie actually was a little stronger than the dollar, but now it's way down, simply because you guys, for some reason, you have a lot of gold, but you have no gold in reserves. The U.S. has, I think, 8,000 tons of gold. Canada has 0. And I go, oh, why the hell? I'm in Canada looking for gold, and your central bank has no gold. So I go, well, why would I do business there? Do you know, that's kind of how I look at things. So you look at the Aussie, the price of gold went up, not because of that, because the Aussie got weaker. The same as the Kiwi. So that's kind of what I mean by macro. And I've since 73 or 2, I've looked at the world via exchange rates.
Right. Now you spoke about the lady in Vietnam, and so what is it that for somebody who's listening or watching now, how does somebody get that intelligence, that financial literacy about money? Because it's definitely lacking. What's some tips that we and some strategies that our younger generation and even our older generation, like what cues can they take?
Well, I get my ass in trouble every time I say this. I wouldn't go to school.
You're speaking with, and look, I think there's a need for school. We need our doctors, we need our lawyers, we need our engineers, so on and so forth. But I mean, you're looking at somebody right now that just barely squeaked by high school. And one thing, my father, who was a taxi driver, who didn't also have a lot of financial literacy, but he made me pay the bills in terms of write the checks, balance the checkbook, so to speak. And that taught me at a young age. And so I do agree with you when it comes to the school talk. Definitely after you finish school, understanding that that's when education really starts.
I wouldn't go to school.
At all.
No, your father did you the best favor of all. He gave you a reality. I think we've lost our sense of humor. I say something like, don't go to school. And I didn't say, don't get educated.
Right.
I said, what I'm saying in this book here, Fake, was your teacher. Do you know, and your father was a great teacher. He was teaching you real life.
Well, both your fathers taught you two totally different things, right? I'd read your book and now I'm listening to it for the first time, actually. And I'm just picking up on so much. For everybody who's watching or listening, you need to not only pick up Rich Dad, Poor Dad, but you need, if you don't know who's on the screen with me right now, just Google this man. He's done it all. And so when you're speaking about the teachers, I mean, you had two dads, and I mean, for everybody who doesn't know the book, it was Robert's best friend's father. I think it was your best friend's father, right? Is it safe to say the Rich Dad? And you actually got to learn and really be in real life, as you mentioned. But your father was an educated man, but he wasn't really able to teach you too much on how to make money.
Yeah, he did. He told me to get a job.
Right.
He told me to go back to school, get my PhD. And I was a pilot when I got out of the military. He didn't even know I was in Vietnam. That's how bad my relationship with my poor dad, because his head was so far up his ass. You know, he says, "Where you been?" I said, "Vietnam." He goes, "Oh, how was it?" I said, "Okay, Dad." He didn't know. I mean, no, you ever admit these college professors who are just in their own clouds?
Yeah, I get it.
Kind of a doofus all over the place.
Now, so what were some of your first few investments? If you can take us back, like what was some of the first few investments? Was it in gold? And when did you get into real estate? Because a lot of my listeners and viewers are real estate people. And so I really want to kind of dive into your portfolio as much as you're okay to share. But so what were the first few investments? Was it all gold? Like, was that kind of the major first investment, Robert?
No, my first investment's in education, but you got to be careful who your teachers are. And so my rich dad, when I was 9 years old, I wanted to learn to be rich. And so I went to work. I went to ask him, because he was my best friend's father. And he said, "I will teach you on one condition. You have to work for free." And when my poor dad found that out, being a Marxist, he goes, "You have to pay people." But you look at every great person works for free. Look at Tiger Woods. He didn't get paid the day he picked up a golf club. Now, he practiced for like 25 years before he became a pro. And so the average person, because they went to school, and that's why lesson number one in Rich Dad, Poor Dad, with 9 years old, the rich don't work for money. My poor dad thought that was horrible, because you have to pay somebody, minimum wage, all of this stuff, you know. It's just two different teachers. And so real estate has nothing to do with real estate. It's debt and taxes. If you can understand, that's macro. But the average guy is, well, is it a 3-bedroom house in Mississauga? Should I buy some property up north in the lakes area? That's micro. Macro, you have to understand what the hell you're doing. And the reason I like debt is tax-free money. So just recently, I borrowed $2 million. Now, was I taxed for that $2 million? Tax-free money. So when you have all these real estate investors telling you, "I don't have any money," it's because they think too small. And debt is tax-free money. So I would rather borrow it. That's why I like real estate, because when I go talk to my banker, I say, "Look, I need $2 million to do this project here." He goes, "All this," he goes, "It's tax-free." And then it's the same. The tax laws are the same all over the world. So with $2 million, I lever up to buy $10 million property. So with a $10 million property, I depreciate it. More tax-free. So I'm trying to tell you something. Get your fucking heads out of your asses and think bigger. Because it's not about Canada, it's not about the US, it's not about this. It's macroeconomics. So the reason guys like me and my friend here, I know he's hated, is my buddy here, Donald Trump, and he and I write these 2 books, is because, are we in real estate? Yes and no. but we use debt and we pay no taxes. That's why Trump won't show his tax returns. And the average little peanut brain out there is saying, show me your tax return, show me your tax return, because they went to school. And then I'm sure you meet all these investors. I can't invest because I don't have any money, because they think too small. You see, the reason interest rates are so low, I don't know what they are in Canada, but they're extremely low in the US, is because they want us to borrow. Because money is only created when we borrow. That's what happened in 1971. That's macro. So it has nothing to do with real estate. It has to do, well, since they're going to print it, and since they dropped interest rates, and since interest rates are tax-free money, and the bigger piece of property I can buy, 10 million, is better than 2 million. And I can depreciate down the $10 million property, and I pay zero taxes. That's macro. So if I could do that with stocks, I would do it too. But real estate's the easiest. But you've got to be very good at real estate management, the business of it, bookkeeping, accounting. And that's the problem. But I'm sure you run into investors out there who think they have to use their money, their equity. I want debt. And that's the difference. And I want as big a property as I can get, because otherwise it's not worth my time. I can't help a pea brain. I can't help, my poor dad was so afraid. He was so afraid, but that's what he taught his kids. That's what he taught his students. That's why when I used to go to school and I talked to these school teachers, and they say, you got to have a job. So you got to have a job, Ben. You got to have job security. And you better pay your taxes. And don't take any risks. And make sure the government takes care of you. If you can't detect a bloody coward Marxist communist, that's it. I am a U.S. Marine. I fought for America. I fought for capitalism. Unfortunately, our schools are run by socialists. That's macro. So all I'm saying is, once you understand this macro and micro, and I'll go back to saying it, is I went to military school, and they had economists who taught us capitalism. And what happens in most educational systems that teach economics, it's Marxist teaching it. And if you don't know the difference between capitalist, Marxist, socialist, fascist, and communist, you're micro. So, and again, real estate is only a matter of debt and taxes. Cash flow. Can I make it cash flow? That's entrepreneurship. And then I look at a property. And somebody says, oh, this property is going to go up in value. I say, will you guarantee it? Okay. It's just I've been at this business too long. So I just always taught to think bigger. So when I was 9 years old, I learned it by playing Monopoly, 4 greenhouses, red hotel. And then my rich dad took me to he had a vacant lot that he put his father was a surplus dealer, military surplus. This was right after World War II. He put those metal Quonset huts, the things that are half moons. Mm-hmm. And so he got the land really cheap. And then he had all this military surplus Quonset huts, and he put it on the property. And there was no sewer; it was septic. So that it wasn't best. But my poor dad then says, "Look at him. Your friend's father is a slumlord." And my rich dad says, "I'm a low-income housing provider." Okay, so that's what so that's how I learned. I had a rich dad and a poor dad. And I killed communists in Vietnam. There are more of them back. There are more back home in the States than in Vietnam.
Now, you've written
and that's why I was in Canada taking companies public on the Toronto Stock Exchange, because I'm a capitalist. You know, it's my whole being is to think like a capitalist. But our schools are Marxist. They're good people, don't get me wrong, but they went to school and they were taught by Marxists.
Now, you've written a lot of books. I mean, for one person to even write one book, that would be an amazing accomplishment. I'm curious, what was your favorite book that you wrote and why?
I've had 8 books on the New York Times bestseller list. They're all my favorites. Rich Dad Poor Dad has now sold 41 million copies. I make $5 a book. You do the math.
You spoke about Monopoly, but your board game has also done quite well. Is that still a...
You didn't ask me the most important question. How come my book will sell so many copies?
How come?
Because I was trained to sell. You say sales, if you understand a financial statement, you have the income, expense, assets, and liabilities. Income is dependent upon sales. So when I was a young boy, my rich dad said, sales equals income. And you'd better learn how to sell. And you know what my poor dad said? Salesmen are scum. That's macro. So when I got out of the Marine Corps, I spent 4 years at Xerox, and the only way I could quit was if and when I became #1 in sales. And the reason I'm a rich man is because I had a rich dad who taught me to be a capitalist. And I have the skills of a capitalist. That's macro. That's the difference. Okay, so it has nothing to do with the economy. You know, if you can sell, you're going to make a lot of money anywhere. If you can't sell, you won't make any money. Sales equals income. So when I'm buying a piece of property, I've got to be able to sell the rent on it. Okay, it's not that, you know, when some stupid real estate agent tells me the value is going to go up, they're talking about capital gains. I want cash flow, because cash flow is taxed at 0. Capital gains is taxed at 20%. That's macro.
Going back to Xerox really quickly, Robert, what made you such an amazing salesperson? I mean, throughout you've been selling books and selling rents and what made you such a a great salesperson?
Well, I wasn't, that's why. Because what I had to do is when I went to see so I started off, you know, it was hard to get into Xerox. And because I couldn't sell, I was shy. And so I still got hired, and then after about a year, I was going to get fired because I couldn't sell. So I went to see my rich dad, and I said, I'm about to get fired. He goes, okay, tell me one thing. He says, how many sales calls do you make a day? And I said, on a good day, 3. He says, the reason you're a failure is because you're not failing enough. That's macro. He says, you'd better find a way to fail faster and quicker. So after I was through work at Xerox, 9 to 5, then I went and volunteered, again, working for free at a nonprofit, dialing for dollars. Now, my goal was I had to make 30 phone calls a night. I didn't care if I got a yes or a no. I just had to fail faster. And the reason I'm richer than most school teachers is I failed more than they have. That's why I said earlier, Tiger Woods didn't get paid the first day he picked up a golf club. He practiced and practiced and practiced and practiced. I remember him when he was an amateur. I was in Portland, Oregon, and he shows up, and I think he was still in high school. And that sucker, I'm going, he just practiced and practiced and practiced. That's the difference. It's not anything special. It's just that in school, they tell you don't make mistakes. And practice is you got to make as many mistakes as quickly as possible for a low price as possible. That's macro. So I just did the things, got the skills with the mindset and the macro. Now, if I could buy gold using 2% debt, and get tax breaks, I'd be buying gold, and I wouldn't buy gold with debt. But I will buy real estate with debt because real estate has income to it. And the income then services the debt. And I get tax breaks. So let me say it again. So when I talk to these losers out there, they say, I can't invest in real estate, I don't have any money. So you're not supposed to use your money. You're supposed to be able to raise capital. So if I go to the bank and I borrow $2 million, which is a sales job, then I'm going to buy, let's say, a $20 million or a $10 million property, and then I'm going to depreciate it. And the cash flow from the property will amortize the debt. And so I get income, plus I don't pay any taxes. That's why I like real estate.
Quite simple. What keeps you going now? What is it that excites Robert now?
I have too much money. It's a big problem. Cash is pouring in. It's really sad because my brothers and sisters are broke because they went to school. So I'm going to have to take care of them. We all have relatives who are going to be taken care of. Because what's going to happen in the next few years, this one just came out, is who stole my pension? Our pensions are broke. Who stole them? Wall Street. You look at the state of Kentucky. They had 16%. They had 16% that they could fulfill their pension. So that when COVID hit, is now down to 8%. They cannot pay those pensions. CalPERS, which is the California state pension system for school teachers, I think it's the biggest pension in America, is underwater $2 trillion. So all those school teachers, unfortunately, I feel for them. They're not going to get paid on their retirement. So this is the biggest crisis coming, and it's already here upon us. Its pensions are broke. And then when they shut down the economy for COVID, that means the state governments don't receive taxes, sales tax and real estate taxes and all this. Pensions, I promise you, it's coming up. Now, how does it affect real estate? Big time. Because right now, my generation of boomers, they have to get out of their bigger houses. The Mac mansions I saw in Mississauga and all that stuff.
It's true.
So, and then the question with that is, how is your millennial generation? This is all macro. How are they financially? In America, our millennials are in debt up to their eyeballs with student loans. That's macro. So what I know about the macroeconomics is the Fed, the Federal Reserve Bank, its job was to get you and I into bad debt. And so when they print, they're going to print another $3 trillion in the next few days. But that money is basically going to guys like me, not the poor. And that's why I write, that's why I speak, that's why I come on programs like you. I'm glad you do well in real estate. I'm glad you all do that. But my job is to get people to think.
I like that.
The question is what did you learn about money in school? Who were your teachers? Did they walk around in Mao Zedong outfits? Yeah. They want the government to take care of them. I don't want to learn from those people. They're good people. It's my whole family. But they all believe the government should take care of you. I take care of myself. Let me give you one more quiz real quickly. So we're going to print another probably 3 trillion in the next few months, few weeks. How long does it take to print $1 trillion?
I don't know.
About 5 seconds. It's basically hit the button. Now, if you and I were if I said, okay, you have to spend $1 trillion at $1 a minute, how long would it take you to spend $1 trillion? 34,000 years.
34,000 years. Okay.
So that's why I buy gold, silver, and Bitcoin. It's macro. It's not that I'm, gold and silver are God's money. Bitcoin is people's money. They're off the bank, outside the banking system. So that's kind of the way I think. So when I look at anything, and then I look at the property. So the thing with real estate, it's micro. It's local area. Do you know what I mean? That you have to know. I couldn't say I'm an expert at Canadian real estate because I'm only an expert in my area. It's like this is my farmland. So I know then I know the area I'm investing in. I know who's coming in, who's going out, and all this stuff. I also know taxes very well. The reason I moved out of California is because they hate capitalists. They hate rich people. So I don't go to California. You have to be macro, and you start coming down, and real estate is micro. And then do you invest in, lakefront housing or apartment houses or single family or office buildings or retail and stuff like that? Those are all micro. And I would invest in retail today.
One of my favorite little sayings that you wrote in the book is mind your business, meaning mind the assets and the liabilities and understand that. That was a massive, massive game changer for me. Funny how just even a sentence can really resonate with people. And so, again, for anybody who's watching and listening, make sure you pick up that book, a Rich Dad Poor Dad book, but as well as Robert's new book. Is that out on Amazon? Is that can people get that now? Your most latest book, Who Stole My Pension?
Yeah, it came out in January, just as COVID hit.
Fantastic. Well, I mean, obviously there's something for people to read. Robert, I always ask my guests to leave our listeners and viewers with one tip, one strategy, either from a mindset perspective, which you dropped so much fire and gems today on, or it could be really just talking about entrepreneurship or investing as general. But I know you're going to go high level, macro. I apologize, and I want to leave it to you.
Well, I go back to fake money, fake teachers, fake assets. How do you know if your teachers were real or not? Do you know what I mean? It's like I watch on YouTube and all this. I made $10 million. I did this and this. But after a while, if you don't watch out who your teachers are, and so I write about in fake. My Sunday school teacher asked me, I was about 9. And she asked me, she says, what made the 3 wise men wise? So this is Sunday school. I'm not preaching now. And I said, well, because, they had frankincense. They had myrrh, whatever else they had. She goes, so the class didn't know. She says, what made the 3 wise men wise was they're always looking for the greatest teacher. And in Christian, it was Jesus. And so I suggest the same thing is individual is now you go out and look for the best teacher. But you've got to be very careful because your greatest asset is really your brain. And you have a communist pinko Marxist putting ideas in your head, which most school kids are getting right now. They're going to think so they'll be rioting in the streets like they are in Portland and Seattle. And, Canada's going to riot too. I know a lot of your, like Vancouver is bankrupt. I know that. Because what they owe on their buildings is twice as much as what the buildings are worth. You're upside down. And the reason you're upside down is you had Marxists in charge of buying the buildings. Now, the good news is, if you're interested in Vancouver real estate, it's an opportunity, the same as Toronto. So, I don't understand retail, and I don't understand office, but I do understand apartment house. Okay, so that's when you get more micro. So I just stay with what I know, and it's apartment house. And I don't know if you know this, but right today in America, we're 250,000 with 250,000 residential properties short. We don't have enough. That's like Miami. Mm-hmm. And what's happening is the Chinese are running from Hong Kong, as you guys know, in Vancouver especially. And people are running from all over, from South America. They're running for many reasons. So real estate's always going to be a good investment, but you better understand what you're doing. Okay, and I have a friend of mine. She was a real estate broker, and I always said to her, "Broker means you're broke, right?" Which pissed her off. But anyway, so I just taught her how to find a property. So she found this one property in Fort Lauderdale, and she split it into 4 properties. So she has an infinite return because she just refinanced the whole thing. And that money is free, it's tax-free and all this. So I said to her, real estate brokers work for 6%. I tipped my waiter 20%. So it's a matter of just shifting your framework on how you look at something. If I could leave you with that, it's because your framework is how you look at something will determine your success. So I think this economy is horrible, but I also think it's good because I know how to make a lot of money at it. So there's always opportunity. And the beauty of real estate, it's very local. It's in your area. So like my wife's mother passed away just recently. And I thought it would be a tough property to sell because it wasn't nice, They had 3 bidders without listing it. And wow. The reason is all these guys are coming out of New York because of the rioting and all that. They went out. So that's macro. So again, real estate is probably very micro. And that's how it gets. But you got to know the big picture, debt, taxes, stuff like that. And then you make a better decision.
Robert, thank you so much for your time. Thank you for all the content that you put out there on video, through the books, through audio as well. I have to say that I don't have a lot of time to read anymore, but because your books are on audio, I got an hour drive in and an hour drive back home. I get to consume the content, and so I appreciate that. Thank you once again, and a big shout out to your team for allowing us to do this.
If I could plug my next book, it's called Infinite Return, and it's coming out in audio, and then it'll come out in print. But Infinite Return is about money for nothing, gold, silver, and Bitcoin for free. If you can think that way, you'll be a rich person.
And when is this going to be coming out?
Probably November, right after the U.S. election.
Gotcha. Okay.
So, but it's about how you think, and you can do infinite returns, make money for nothing. On anything. Okay.
I love how you close that off.
Don't go to school.
I love it. Thank you once again. I really appreciate your time, Robert.
Thank you. Thanks for letting me be tough on you, because I am a Marine, and I don't really have time to be nice to people.
I like it. Hey, I like it. We all need more of it.
Thank you, man.
No pussyfooting around. I appreciate that, my man.
That's right, man. Take care. Be tough. Be
all right. Take care. Thank you.
Okay.
This has been the REC Experience Podcast with Jas Takhar, an REC Canada production.
Hey guys, thanks so much for watching and listening. Please take a second right now to subscribe and follow us on whatever podcast platform you're watching or listening. It means the world to me. Thank you.